I'm providing commentary and analysis for free that I think and hope and expect will further your understanding of the economy and the financial markets. The financial news media is so bad, and it really has always bothered me throughout my career. Their goal, first and foremost, is to sell you entertainment. So that's the first reason I do this. Second reason is because, as I've been saying for months, we are going to have a rough ride in our financial future. And what we've seen in the last week is just an example of how fragile our financial system is. And I'm not even talking about just in the short term, medium and long term also. We are going to have a rough ride. So today, I want to continue to talk about how a diversified portfolio is particularly beneficial in tumultuous periods like we're seeing right now. And I'll show you a real-world example of what I'm talking about, including some investment decisions that I made today to explain this. As an important disclaimer, this is commentary and analysis and not investment advice. I don't know what's best for you and your own particular financial situation, so please talk to an advisor who can determine what is suitable for you. Investing success is almost certainly the result of a long stretch of good decision making. I think people spend too much time trying to figure out how to buy the next Bitcoin at 75 cents or find the next thing that has a lottery-like payoff to it. Your financial success is almost certainly not going to be because you invested in something that was like a lottery ticket. And just assume for a moment you did buy Bitcoin at 75 cents, okay? If you put $1,000 into it and Bitcoin went to 1,000, that $1,000 investment would be worth $1.3 million. You think you would have held it that whole way? And even if you did, Bitcoin has gone down over 80% 3 times. So on its way to its peak of $20,000 per Bitcoin, when it was worth $26 million, let's say, your investment in my little example, do you think you would have held it the whole time? What would you have actually done? So my point in asking this is, what's the actual plan? What is the plan? You've got to have a good plan with consistent decision making along the way. If I have clients who are interested in chasing lots of those ideas, I think that's great, totally reasonable, and we can, decide on some portion of the money that is, that's suitable to chase these other kinds of ideas. I've recently pointed out the benefits of a diversified portfolio. In How to Invest During a Recession, the video I recorded a little while ago, I showed you how a well-constructed portfolio that's diversified can have dramatically less volatility. And that lower volatility will be dramatically helpful in allowing you to stick with that plan. Okay, so in addition to that, which was really just a static mix of different assets, that's really in that video what I was showing you was just a fixed mix of these different assets over time. Okay, there is also an additional dynamic, which I'll call a rebalance benefit. Okay, so and what that benefit is that when these different instruments move in response to dramatic events like when we've seen, then you can rebalance at that time where you're essentially taking profits from some of the instruments that have gone up a lot, and you're using that cash to invest in some of the instruments that have gone down a lot. So for example, and for reference, I'm recording this after the close on February 28th, Friday, February 28th, the last day. Since we've had such dramatic moves in the last week, that has allowed me to sell a portion of a few of these things which I've highlighted before. IEF is a symbol for the ETF that represents the 7 to 10-year government bond, and here's a graph of that, and you can see how that's been very strong. TIP, which is a government Treasury Inflation Protected Securities, TIPS, basically. SHY is another ETF that represents the 1 to 3-year government bond. And so I sold a portion of those, roughly a third of each one of those investments, and I used that cash and some cash that was already existing in my portfolio in order to buy equity-like instruments like this ETF, GVAL. You can see that's gotten crushed just like all the other equity-oriented investments have also. COWZ is another one. You can see that's gotten crushed. There are other ones also. I don't want to give away all my secrets, but you can get an understanding of what I'm talking about here. These are not recommendations I'm just explaining to you what I'm doing, and I think it provides a good example of what can be done when you own a diversified mix of these different asset classes. Now, in doing this, I'm not making a big speculation that we are going to recover shortly. If we do recover, then the portfolio will benefit from these changes that I've made. But also, if what we've seen this week continues, then and continues to get worse, then I can continue to do what I just explained even more. Okay, so I'm really able to do this without making some kind of big bet that I have some particular vision of what's going to happen in the next week or two in the near term, given the volatility related to the coronavirus. Some people might rebalance yearly, and I think that's a fine strategy, to just say at the end of every year, I will rebalance back to some target allocation. I think it's probably better to take advantage of when you have dramatic market dislocations and then take advantage of that volatility and rebalance. Of course, that has tax considerations also, so that also goes into a question of what's suitable for you and your portfolio and whether it's a taxable or non-taxable account. So just wanted to touch base and show you how a diversified portfolio can be a big benefit in an environment like this. Please reach out if you're interested in working together to manage your portfolio, and also please subscribe and make sure you hit the bell next to it so you can be notified when I post a new comment. Thanks.